Those are some of the headlines. This is Democracy Now!, democracynow.org, The War and Peace Report. I'm Amy Goodman.
And I'm Juan Gonzalez. Welcome to all of our listeners and viewers around the country and around the world. We begin today's show looking at the $25 billion mortgage settlement agreement by the nation's 5 largest banks to resolve claims over faulty foreclosures and the mishandling of requests for loan modifications. The 5 banks involved are Bank of America, Wells Fargo, J.P. Morgan Chase, Citigroup, and Ally Financial. President Obama hailed the deal at a press conference on Thursday.
We have reached a landmark settlement with the nation's largest banks that will speed relief to the hardest-hit homeowners and some of the most abusive practices of the mortgage industry, and begin to turn the page on an era of recklessness that has left so much damage in its wake.
The bulk of the mortgage settlements expected to go to as many as 1 million homeowners in the form of reduced mortgage debts or refinancing at lower interest rates. Another 750,000 people who've lost homes to foreclosure will receive between $1,500 and $2,000. President Obama went on to outline several aspects of the deal.
Under the terms of this settlement, America's biggest banks, banks that were rescued by taxpayer dollars, will be required to right these wrongs. And that means more than just paying a fee. These banks will put billions of dollars towards relief for families across the nation. They'll provide refinancing for borrowers that are stuck in high interest rate mortgages. They'll reduce loans for families who owe more on their homes than they're worth. And they will deliver some measure of justice for families that have already been victims of abusive practices. This settlement also protects our ability to further investigate the practices that caused this mess, and this is important. The Mortgage Fraud Task Force I announced in my State of the Union address retains its full authority to aggressively investigate the packaging and selling of risky mortgages that led to this crisis. This investigation is already well underway and working closely with state attorneys general. We're going to keep at it until we hold those who broke the law fully accountable.
The deal with 49 states and federal agencies is being billed as the largest federal-state settlement ever obtained. But many consumer advocates question if it actually makes a victory for the banks. On Thursday, shares of Bank of America rose 6% to its highest level since September. While the deal is being described as a $25 billion settlement, the banks only have to pay out a total of $5 billion in cash. Millions of struggling homeowners will not be affected because their mortgage is held by Fannie Mae and Freddie Mac or the Federal Housing Administration.
Joining us now is one of the most prominent critics of the settlement. Eve Smith is a longtime financial analyst who runs the popular finance website Naked Capitalism. On Thursday, she published an article called The Top 12 Reasons You Should Hate the Mortgage Settlement. Eve Smith is author of the book Econned: How Unenlightened Self-Interest Undermined Democracy and Corrupted Capitalism. Eve, welcome to Democracy Now! Explain what this settlement is about.
The settlement on the surface does look like it's helping homeowners, but in fact the bigger part that most people don't recognize is the way it actually helps the banks with mortgages on their own books. What changed in the practice of how people do mortgages, and one of the reasons why we had so much trouble, is that most mortgages are now securitized. That means instead of going to your bank like you did in the old days and having the bank make the loan and keep the loan, they're then packaged with a lot of other loans, and the cash flows from them are distributed to investors. And the procedures for getting the loan from the bank to the trust on behalf of investors were very complicated, and the fact the banks didn't behave those procedures then is what led to is a big factor of what led to robo-signing. That's why they had to sort of fix the paperwork for what they hadn't done right in the first place. Now, in many cases, borrowers don't just have a first mortgage, they have a second mortgage. Unlike the mortgages that were sold, the banks mainly kept those second mortgages on their own balance sheets. The way this, and normally, if a borrower is in trouble, or in any, not just borrowers, you know, if a corporation has a bunch of different loans, you always reduce the weakest one first. You wipe it out before you even touch the stronger mortgage. $10 billion of this deal is in the mortgage modifications, where the bulk of that is expected to come from investors, not from the banks. So even this is billed as a $25 billion plus deal, in fact, $10 billion of that is actually going to come substantially from investors, and then the other piece, they've got another $7 billion, which is other forms of relief. Some of that's a bit dubious too. For example, they've got $3 billion of that in forgiveness if somebody's been foreclosed upon, but the value of the house doesn't cover the amount of the debt. That's what they call a deficiency judgment. That means that, in theory, the bank could still pursue you for the money that they didn't recover. In practice, this bank hardly ever do that. So they're basically going to get credit, and for people they weren't probably going to go after anyhow.
And what is the impact of the decision that those mortgages covered by Fannie Mae or Freddie Mac or by FHA would not be subject to this settlement?
Well, that's more than half the mortgages outstanding. So more than half the borrowers aren't even in consideration for any kind of relief. And then of the ones that remain, the number that the administration is using is around 1 million. It's going to depend on how much the banks actually do and whether the enforcement is tough. And in fact, some of the provisions of the enforcement are very troubling. But even so, you're talking that versus the numbers vary by who's running the numbers, but roughly 10 or 11 million borrowers who are underwater. I mean, even if you accept that this deal is going to work as it is on face value, only a very small proportion of borrowers who are suffering are going to get any help.
Can you tell us how this deal was made? Because for quite a time, Eric Schneiderman, the Attorney General of New York, and Kamala Harris, the Attorney General of California, among others, like Beau Biden of Delaware, were opposing this.
Right. There was a big change in the last month. Initially Schneiderman was one of the first to be critics, and he was one of the first to file subpoenas. And then other states, as you pointed out, like Beau Biden, like Martha Coakley of Massachusetts, were critics and started filing suits. It really looked as if the deal wasn't going to get over the line. And then when Schneiderman agreed to join a federal task force that would do mortgage investigations, he went quiet on his opposition, and that appeared to have a very destabilizing effect on the other attorneys general who had been opponents of the deal. Schneiderman kept talking as if this investigation would be very serious. Quite frankly, the track record of these investigations has been very poor. He may sincerely believe this is going to be serious, but that very much remains to be proven.
The other aspect of this that hasn't got much attention, and I was listening to Schneiderman being interviewed defending the settlement last night, is that a lot of these attorneys generals will be getting cash payments directly from the banks to their offices, right, which they will then be able to decide how to use that money. In some cases, it's $100 million or more going to some of these offices.
Oh, well, that's correct. And that actually always was part of the plan, and that's why so many state attorney generals actually had been on board initially. The administration really knew that it already had at least 35 in its pocket. There were 5 that had been public in terms of being out, and then another 10 that had met. So it was 15 in total that had met to discuss their possible opposition to the settlement. So we were really fighting about these state attorney generals, but California was the big one that they were very concerned about getting in. And of course, then there was also just New York because of its visibility and because New York has the Martin Act, which is much tougher in terms of they can basically use it to file effectively securities lawsuits against banks. It's the only state that has that power.
I wanted to turn to California Attorney General Kamala Harris, who ended up signing onto the deal after months of criticizing the settlement, as you said. On Thursday, she commented the settlement will not help the millions of homeowners whose mortgage is held by Fannie Mae and Freddie Mac.
While this is a tremendous victory, $18 billion for those who are in their circumstance as a result of the conduct by the 5 biggest banks, the reality is 62% of the mortgages in California are owned by Fannie and Freddie. And that is why months ago we sued Fannie and Freddie in California. Because this is about making sure that we bring relief to all Californians. And our focus then cannot afford to be myopic and look only at the banks. Because the reality is that Fannie and Freddie are right now being run by a fellow named DeMarco, who I've said before and I say again should step aside, because the guy can clearly not figure out what his job requires. And in particular, it requires that in California we see principal reductions on those Freddie and Fannie loans. So part of our focus is also on Freddie and Fannie.
And this is Attorney General Eric Holder at the news conference Thursday.
Our investigations revealed disturbing practices. For instance, we saw that far too often servicers pushed borrowers into foreclosure, even though federal regulations require the servicers to try other alternatives first. These failures didn't just hurt borrowers who might have been able to afford modified mortgages. They fueled the downward spiral of our economy and of communities nationwide. They eroded faith in our financial system. And they punished American taxpayers who have had to foot the bill for foreclosures that could have been avoided. With this settlement, we are recovering precious taxpayer resources.
That was Attorney General Eric Holder, your response to Harris and Holder, and then exactly how much the banks are having to really pay out.
Well, the fact is that even though Fannie and Freddie are not part of this deal, Fannie and Freddie actually have done so far more in the way of mortgage modifications than the banks have so far. And as much as you can argue whether Fannie and Freddie have done more, should have done more. The fact is that they're kind of under conflicted guidelines. As a conservatorship, DeMarco is actually supposed to recover for taxpayers, so his guidance in terms of what he's doing is a bit conflicted. But the real problem is that this deal is just not going to give that much relief. The mortgages are underwater in the U.S. $700 billion. Even the most generous estimates of how much relief that this deal will provide is $35 to $40 billion. I mean, that just isn't that much. And the notion that homeowners who are foreclosed on are going to get a $1,500 to $2,000 check, I mean, we've just basically said the price of fraud is $1,500 to $2,000.
Well, that's what I wanted to ask you about, this whole idea that these 750,000 people who lost their homes, and through processes that clearly now were fraudulent in terms of the robo-signing that we've had the judge from Brooklyn here talk about several times, that basically now these banks and their companies that participated in this massive fraud in terms of signing these documents are now off the hook.
Well, it's even worse than that. I mean, Holder sort of alluded to it. He said that the servicers actually drove foreclosures, and that's an astonishing admission. And it's actually true that there's plenty of evidence that it isn't just the paper. Banks keep loving to talk about the paperwork. It's the fact that the banks often charge abusive and impermissible fees. There's a story about Gretchen Morgensen about a fellow who first got on this trail in the mid-90s, a man from a fairly wealthy family, who discovered that the banks had, when he tried to pay off a mortgage, there were $18,000 where they said he'd paid late, where he'd made all the payments on time, and even he couldn't win in court because just the evidentiary burden, getting the banks even to produce the records is quite difficult. So there's a whole nother layer of the story that this is papering over, about the bank's abusive practices and how they charge borrowers.
Would you basically say the banks are getting parking tickets for felony offenses?
That's about right.
What do you think has to happen now?
Well, we've made it difficult for the right things to happen. I mean, where we had been before the deal was that attorneys general would, at least some of them would pursue the banks aggressively enough that then the federal government would have to follow. We've seen that with other financial abuses. There was a big scandal a couple of years ago in the auction rate securities market where the SEC did nothing until the states started going after the banks. So we've taken away the biggest opportunity to get this fixed.
How does Schneiderman, the Attorney General of New York's lawsuit filed, Friday, fit in with this story against the banks? And do you think he decided to sign on to the settlement because Obama gave him this leadership of the task force? Well,
I know a number of people who believe that Schneiderman is sincere in this effort, but people can still be sincere and make poor decisions. The New York State Attorney General's office apparently has had very severe budget cuts, and so he felt, I'm told he felt constrained in terms of what he could do. Now, the suit that he filed against the electronic registry MERS both names the registry itself, which basically has no people and no money. So even though that part of the suit is quite winnable, it's not going to produce much for homeowners. He also names the banks, and no one has yet gone through MERS to actually pin the liability tail on the bank's donkey yet. In theory, if he took that suit all the way, that could provide much more aggressive reforms in terms of just the day-to-day way the banks handle the paperwork. But again, most of these cases settle. I mean, 95% of cases settle. So if he just gets monetary damages, that doesn't mean that the underlying problem is going to be fixed.
Yves Smith, I want to thank you for being with us. Financial analyst, runs the popular finance blog Naked Capitalism, author of the book Econned, How Unenlightened Self-Interest Undermined Democracy and Corrupted Capitalism. This is Democracy Now!, democracynow.org, The War and Peace